I want welcome from Acumen Accounting. Right, previous video we have made on UK property investment. Today video is about the allowable expenses and which expenses you can offset against the income you receive from your property. So because there are new legislation in place, most people say, the HMRCs keep saying our self-assessment and the UK tax system is fairly easy, but it's very complicated because some new legislations are in place. Because if you have a limited company, you can basically claim all the finance costs. For example, the interest you pay on your buy-to-let property as a mortgage. But if the property is your name, you are not allowed to claim all these expenses. So today's video, I'm just going to focus on which are allowable costs and which are the expenses you basically can put in your self-assessment tax return. When you're going to do your return, you can put these all expenses and offset against any rental income you receive. So this video is very important for all the landlords, the people who have properties already, or the people who are new or going to do investments in the property. They need to be aware which costs they can basically put against the expenses. So just remember three things. Number one is repair, renew, or replace. So if you have a property and if you're doing any of these three things, for example, you are repairing a floor, existing floor in the property, or you are renewing any, for example, the plastering, or you just putting a paint on the property, these are all allowable expenses. So make sure when you're doing your tax return, you know what you're doing. Don't just stick up the costs which are not allowed. And if you need to seek a professional advice, you can always get in touch with your accountant. They will definitely help you and guide you to the right direction with costs available. Because what we've done is in the past is we have some clients come to us and some of the problems they have is basically they don't have a clear advice. And we at Acumen Accounting, we always recommend you just come and speak to us. We don't charge talking to people. So if you need any advice around your property, or if you're thinking about, how you can claim these expenses and you need a bit of a kind of just like education kind of help, you can always pick up a phone or just book a up to 60 minutes free appointment. So if you are in the property business, you need to make sure you are claiming all these expenses. Otherwise, what happens is you ending up paying more tax. And this is the problem. So in some cases, if, for example, you have a property and you stick in all these expenses, you've done the renewal or the repair into the property, and you ending up having a loss, for example, to declare, that's absolutely fine. You can carry that forward loss to the next year. So it means even in the following year, you will still pay less tax because you have some losses which you have carried forward to you from your previous tax year. So these are all things which you need to make sure you have in place. Or if you have a professional like an accountant, they will basically make sure you will pay less tax, which is allowable expenses and legally which you are allowed. And one more example I'm just going to give you is, for example, you acquire a property. It's a brand new, like for example, you took a property as a buy-to-let, and sometime happen is some of the examples we have seen is one of our clients, he's been advised, you got a property in place now. So whatever the expense you're going into the property, because it's new for you, all the expenses are capital. What does it mean by capital? Means that adding value to your property, you cannot put these money into the expenses. But this is not the case. So even if you acquire a new property and you're going to let it and there's some need to be renewed, replace or repair, you need to make sure you stick that in your expenses so you can pay less tax. So I'll give you another example where we can say the capital expenses. So for example, you acquired a property and that property is a bit of a large property and decided to change into the HMO, and you're doing a bit of an extension taken in the back of your garden. You're putting a new kitchen in place. So these extension was never there. So it's basically a new thing which you're putting in place. So this is a capital expense. So that will add value to your property. You cannot stick as an expense for your tax return, but you need to memorize and remember the expense you have done, because this will help you reduce your capital gain tax. So when, for example, in future, you sell your property because you have spent that money to upgrade the property, that money you have spent is basically come off your capital gain calculations. So this will help you even pay less capital gain tax. Again, this is a very specialized area. And if you think you need some advice and you wanted to speak to somebody, just pick up a phone or send a message to us as a private message, or you can leave a comment at the bottom of this video. We will make sure we'll help you and guide you to the right direction. And again, remember, we don't charge talking to people, and we offer up to 60 minutes free appointment. Again, any questions you have around the properties, please feel free to get in touch. Stay safe, stay healthy. Bye for now.